All right. Good morning, everybody. So markets are trying to lift a little bit after the move yesterday, the moves this week, really. Japan down another 5%. Keep adding these up, right? The absolute beatdown that the Nikkei has been taking is impressive. That's got to be an entire wall of worry all on its own, not just a brick. Hong Kong down about a quarter. Everything else flat to up, with Europe, UK, both doing overall right. It's a mix. NASDAQ up the most, near 0.5%. All of this more of a rebound rather than a significant rally. We're going to get some jobs data today. This isn't the big one. Non-farm payrolls is the big one, but it's still job data. And the Fed is always looking towards the job data. So we want to pay particular attention to that. We're going to get more Fed speakers. Surprise. Some more housing data. We got some housing data earlier this week. It was cool. We were looking for the housing market to warm up in 2024. Not to be, all lit up and on fire hot, but a warm market at the least. And we didn't get that earlier this week. So watching this number, see if we get a little bit of a turnaround there from the other numbers that we got this week. And then Bosick doubling down 2 different times today. And you can see for tomorrow, I mean, we really don't have much when it comes to Friday, not on Market Watch. And Market Watch is useful for US and for what they deem the most important. They don't try to get every single event, and they certainly don't pay attention to any other markets around the world. So if you're looking for just a quick what's going on today, Market Watch is a good spot. But FX Street looks around the world and tries to do a more thorough job of bringing us every sort of economic event. Just keep in mind that this isn't all of them either. There's so many more that we just rarely ever hear about because most of the time they're boring and they go under the radar and we just don't really see a ripple from it. But every once in a while, they do cause a stir in the market. And it's usually a move where everybody's looking around saying, what the heck was that? And we look around and there's no news. There's no reason that we can see. There was just a lot of flow come in and the market makes a sudden jerky move. And we're all just left wondering, oh, what was that? Inevitably, though, even when we don't know what it was almost always on the hour or on the half hour because, well, it's government and that's what they do. So it's not hard to see it coming, even if you don't know what's on the docket every half hour, every hour. Anticipate that we could get some volatility, we could get some liquidity coming in. That's really important for you scalpers that are trying to use really tight stops, like 2 and 3 tick stops. New hour, new half hour, you're very likely just going to get stopped out. We do have auctions again today. They're only showing 11:30 and 1, but if there's auctions at 11:30 and 1, you can almost guarantee that there's auctions at 11. We're just not seeing them here. So I would watch for that. We're still in the front end. We had the 20-year auction yesterday at 1 o'clock. Go and look at the S&P and the NASDAQ yesterday at 1 o'clock and look what happened after 1 o'clock. And then say, thank you. Because that was the 20-year. I continue to talk these different sites up. You don't need an account at any of these. If you do a free account at FX Street, which you don't need to do a free account here, but if you do, don't give them your email address. Give them a fake email address because these guys will bomb you into oblivion with just spam emails. Now, if you sign up with a live account, spend money on an account here, they're great. They don't bother you hardly at all. I have an account here. absolutely worth the money that I spent on it, but you don't need the account, right? And really, you don't need to even sign up. But Finance Juice, on the other hand, Financial Juice, if you don't have an account here, get one. It's free. I have a paid version, but you don't need to have a paid version. You just need to have an account. If you have an account, you can use a filter. This is a news aggregate website. It gathers news from all over the place. And I don't know about you, but I don't really care what Fox News has to say, or CNN, or MSNBC. I don't care about that trash. I don't want to hear it. I don't need it all over my screen. And I use the filter to make sure that I don't see that junk. If you don't have an account, then you got to keep going in and changing that filter every day. But if you have even a free account, you can change your filter, have it set, and it won't change on you. You also get tick strike, which is order flow on the futures. Now, this is the free version, but it's better than no version. Turn that thing up and you'll hear when flows start coming in, and it's free. It doesn't cost you anything. Of course, you can get a paid subscription to that. I don't have it because I have Jigsaw, so I don't have a paid version. But even that free one has got my attention when, I get stuck in a book, maybe fall too deep down the rabbit hole, watching a cat video or something. I just ain't paying attention. I hear the flows coming out of that thing and it brings me back. I do have the pro version of Finance Juice because I can turn the voice news on. I don't have to sit and watch this screen. If something is happening, they'll say it. And a lot of times they say it before it gets posted by a good 20 to 30 seconds. And that's very, very helpful. So I have a paid account, but you don't need it. This one is the most reactive to current events. So if there is somebody out speaking, you'll see the things that they say post in here if it's deemed market moving or market relevant. So absolutely useful. It's also like when Powell was suddenly on the docket to speak, if there's changes to these schedules, this site is more likely to recognize the change and post the change. The only problem that I have with it is that it recognizes my time zone and it's showing all of these events in my time zone, which is okay, I guess. Doesn't bother me that much, but we all trade the same market. We want to try to keep everything on Eastern time zone as much as possible. If I take pictures of this and post it somewhere, it always has to come with a warning or a disclaimer. Hey, that's not the right time zone. Add an hour or whatever. It's just confusing to people. We don't really have a lot going on today compared to what we've had. I mean, it looks like there's a lot going on, but a lot of these are just doubling up, right? A couple of these are at 10. EIA gas, unless you're really messing around with gas futures, this one's not going to be a really big deal. There's not a whole lot today. We're going to get some big data out of Japan tonight. That's likely going to be a pretty big deal, but that's tonight. It'd be more important for tomorrow than today. Still want to pay attention to what the Fed is talking about. We've got multiple speakers from Bowman, Williams, Bosick twice. We're going to get European Central Bank speakers. So really want to, I think the message is clear, right? That they're all singing from the same hymn book. They're all suggesting or walking back the possibility of those 6 rate cuts this year. Remember, that's what we came into 2024 with, is the assumption of 6 cuts. Now, there was still one firm, and I didn't catch the name of it. They were talking about it on Bloomberg this morning, that is still pricing in 5 cuts. And it wasn't some Joe Schmo, middle of the road, nobody firm. It was a big one, like a Goldman Sachs or a Bank of America. It was one of those. It wasn't one of those two, but it was a big name like that. That's still pricing in 5 cuts. That would be dramatic. What that implies is that things are going to start to turn really negative really fast, and that the Fed is going to start cutting, trying to backpedal the restrictions and to ease liquidity. Now, if you think about where the S&P and the NASDAQ and everything is at in this topping pattern that's beginning to slowly roll over, then you add in some big bank or firm suggesting that we're still going to get 5 cuts because the Fed's going to have to start playing save a hoe and pull this market out of a tailspin, you're looking at 4,900, 4,850, maybe 4,700, that we could really take a dip before those cuts start to come into play. I'm not advocating this, right? That's not my baseline bet at all. Just playing out the scenario of what this firm would be thinking about with getting so many cuts. 5 cuts at this point, when we're already thinking about the 5th month, May 1st, with FOMC and QRA. So it's something to think about. Otherwise, we're going to get the jobs data today. We'll get some of these front end auctions and watch what the Fed has to say. There's those 11 o'clock auctions. I knew there would be some in here somewhere. We just weren't seeing them on FX Street. So 8:30, 10, 10:30, 11, 11:30, 1 o'clock, and then add in all the speakers from Europe and the US. It's going to be a pretty busy day. All of these front end auctions, I mean, the 2-year is important. Out of this entire list, the 2-year to me is the most important out of this group. So it's not to say that the others don't matter, just that would be the one that I would be the most cautious over. It's that 2-year. The volume's a little lighter this morning than it has been over the last, 4 days, when we had 130, 180, 135, 134. We're now back into like last Thursday's numbers when we came in at 104, and today we're at 107. So a little bit lighter than what we had seen over the last 4 days, but still heavier than what we had seen for most of the year, when most of the year's been in the 60s, 70s. So these hundreds are nice. It's really showing that, especially for this time of year, that's nice. It's a little bit of a surprise, but we'll take it. We don't have a market maker move, so they're not hedging in the front end of this. I did mention yesterday to watch for the market maker move because we were in this sideways market, which implied that we were waiting on something. And I had this sneaky suspicion that we were waiting on that auction. And to validate that, the suggestion was watch for a market maker move to show up as we get closer to 1 o'clock, because it's going to show they're going in and they're hedging and they're protecting themselves against that move at 1 o'clock. Sure enough, we started to get that yesterday before the 1 o'clock auction, and we're done with that range. So it can move on now from that. Hopefully we're not just moving down into a new zone where we will yet again build a range and sit here for the rest of the week. That would be disappointing. So let's anticipate that we're going to come out of this one direction or another. Just keep in mind that any upward move at this point has so much weight against us. The options are against us. All of these pivot points are resistance. There's just so much that we have to work through. It's hard to see how we will make a clean, straight shot out of it. Like, good news comes in and just propels us higher like a rocket. I can't see that at this point. It would take a significant change in market behavior to be able to sustain a positive push through this quickly. I think it's going to take a lot of time at this point. That old adage about taking the stairs on the way up and jumping out the window on the way down, I think it's going to take a slow, steady climb back up through all of these levels when the time comes. And I don't think we're there yet. So temper your expectations for, some sort of rip your face off rally that brings us back into 5200s and 5250s. I really don't see that yet. Now look at the cumulative volume, and we are on a weekly here in this perspective. This isn't quite a squeeze. And we would have to turn on the Keltner channels and add it to this just to see if we really are squeezing. But the shape of it implied a contraction in volatility. And that just usually precedes a big move. So did it squeeze enough? Was it enough contraction to be considered a squeeze? I don't think the semantics really matter at that point, just that we had a narrowing or a constriction in volatility around the cumulative volume index and that we're now expanding and it's to the downside. At the very least, we're going to have to burn that off before we could consider flipping around. And cumulative volume is most easily read in a term of net, right? Just add the word net to it. So it's net selling here. Who's in control, buyers or sellers? We're pointing to the downside, net selling. Now that's very overly simplistic, but it works. There's no reason to nerd out on you this early in the morning and squeeze your head like a melon. Just keep it simple, right? Net selling is in control until that changes and starts pointing to the upside. How's that for easy? We are getting closer to the 20-week. If we were looking for the next level of support or the next area of help, then 5,000 makes perfect sense. It's an options level. It's the 20-period weekly moving average. It's very likely where an ADR level is. If we look here, yep, there's an ADR. So 5,000 makes perfect sense. I'm not saying that we go there, just that if we continue to move to the downside, 5,000 is where I would expect the next level of support. And support can be a funny word. It's where we're going to expect them to monetize puts, maybe even to load up on some calls. That behavior alone is supportive of the market. They will try to flip it at that point, run it back up. They'll try, and that's the key word. If they don't succeed, then they'll just flip it back over and dump it to the downside as hard and as fast as they can. But it's very likely they'll try to run it to the upside at that point, just like yesterday off of that low. It wasn't a surprise, called it out in advance, had the auction coming in there as well. We were all ready and prepared for that flip, and they tried to run it up. But then Biden came out chipping his teeth and, well, didn't work, but they at least gave it a good shot. We are closer, by the way, to the upper edge, to the red line on the upside than we are to the downside. It's worth keeping in mind. Not that they act necessarily like gravity, but they do make good goalposts. We hit the ADRs a lot. One side or the other, and oftentimes both sides in the same day. We hit these ADR levels. And unfortunately, I don't have a statistic to tell you how often we hit it. 80, 90, 95. I just don't know. We hit them so often that I look at them daily. I watch them all through the trading day. They are one of the most important things on my chart when I'm trying to figure out where are we going. And when we are close to one, that is the goal. I continue to focus on that until we move far enough away that we cross the center point. So if you think about the distance between these two and where the halfway point is, until we get below that, I'm continuing to focus on the upper edge because we're closer to that one. Now, if price action and market behavior tells me that we're just not going there, if things start to get nasty fast, I don't need to cross that line to decide we're going to the lower edge or to give up on the upper edge. But until something tells me differently, that's my target. That's my goal. We don't have an MDP today. That would be a missed daily pivot. We hit the pivot yesterday. We've already hit the pivot today. So that's not in effect. And as I mentioned, we're underneath all of the major pivot points, 0 gamma volatility trigger, 10-week moving average, 10-day moving average. We're underneath everything. The only thing that's underneath us at this point is the put wall. 10-day, 30-minute volume profile with TPO. We don't have any disparity at this point. There's nothing really showing up of concern. There is a slight variation between the point of control on the TPO and the point of control on the volume profile, not enough to cause an issue. We still want to ask the question, is the profile going to move the point of control anytime soon? And looking at this, unless we are to stay here for a significant period of time, we're not going to have it move down just from losing anything on the left side. Over the next few days, we're likely to lose a little bit off of this higher shelf around a 5250, not that 5200 area, because this little bit here very likely won't be enough on its own to move that plot. We've got a relatively wide profile at this point, 250 points or so. So I'm just kind of rounding a little bit, but 50-40 on the downside and 5300 on the upside. That's a pretty wide profile for 10 days. We've seen it as narrow as 50 and 60 points. So having it, at 250 is pretty good, but it really spreads us out. It also shows the significance of the severity of the move that we've had over the last 10 days, where we've moved so deep to the downside. Five-day, 5-minute profile. It's mapping out the 5x5. One thing that I like about these profiles is when we look at yesterday, try to gauge where was most of the volume at yesterday. It was in the lower part of the day. And if we can't maintain that, then it just continues for the next day. So if we were to back up and think about what it looked like a few days before this, here's the same concept back here. Where is the greatest amount of the volume on that day down at the bottom that we came down into that, and they tried to play save a hoe. Same thing here. We came down into it. Where's the greatest amount of volume? Down there. We tried to get above it, couldn't keep it. They washed it out. Here, we really struggled to get above it, and we couldn't. Yesterday, still closing in the lower part, trying to get above it, and so far we can't. So even if we do get above it, like we had in this example back here where we did get above that, we weren't able to keep it. And when we came down and tested that spot, it really was defended. That was a great opportunity for a play right there. At the time, it was a VPOC that we had carried forward. But they really did put in a lot of effort trying to defend that. It just didn't hold. It didn't work. And down we went through it. But the bulk of the volume was still in the lower part of the day. And you take a day like this where there's just nothing there, right? One way or the other. We didn't have that expanding profile. We didn't have like a B shape or a lowercase b. We could classify that day as more of a D shape, but it should have been more of a classic bell. And that's just squish, not much of nothing. So we want to focus on this low profile here, this lower end of the map, whether or not we can get above it and keep it. And I would, even though these are gone now, they are no longer VPOCs. I would be mindful of those levels if we do start going to the upside soon, right? Like today, for an example. If it's next week or so, probably wouldn't hold them in as much of regard as I do this week. It's worth keeping an eye on for sure. Speaking of VPOC, we don't have one from yesterday to carry forward into today. So from that point of view, nothing else here. The TPO and the volume profile match in its point of control. So there's no divergence or disparity in that. We're still below the 10-week. It's not a surprise, but this is telling us we're not oversold, at least not on the weekly. Looking at it on the daily, you can see we were lower than where we are now. We're about 1.5% below the 10-day. We were as low as 2% below the 10-day. So we're actually trying to work our way back up. And if you look at previous examples, when we do get below the 10, unless we're straight up in a bear market, then we usually dip down in there and we start to work our way back out of it again. Like in these other examples where we set a low and we try working our way back again. It doesn't mean we'll make it back in one shot. We've tried to work our way out here and dropped back down and had to try again. Same thing here. We set a low. We spent days trying to work our way back out of it and then set another low. So, if we look at where we're at here, we've set this low. We're now trying to come out of that low to get closer to the 10-day again, but we can get a reset, get knocked back down. We are outside of the weekly expected move. This is how far we were supposed to have moved on the entire week, and we should be closing inside the box at least 80% of the time. So Friday at the close, the expectation is that we'll be back in the box because that's what we should do 80% of the time. The question always comes down to, is this the 20% or not? So far, nothing is telling us that we won't close back in there. We really don't have anything down this morning. The VIX is down, and that's it. Nothing else reaches our threshold. If we look at what's up, what's that? Bitcoin tops the list, 2.82%. If you're day trading equities, you would probably want to focus on that the most. Bitcoin's up, so you've got Riot, Mara, Hut, Hive, Hood. A lot of semiconductors tie into Bitcoin as well, but you've got Coin. That's another one pretty obvious. MSTR, the ITO, all of those, GBTC. Those are all equity type products that you can trade, not digital coins like trying to trade Doge and sushi and whatever. So if I was a day trader looking for equities to trade, that would be my number one space today that I would focus on, is the Bitcoin space. I'm not seeing it here, but when we jump over to TrendSpider, you'd also probably want to look at pot stocks. We're continuing to see more and more out of that space. So we do have Bitcoin. Behind that, we've got some China ADRs, MCHI, and KWEB implies that another group you could focus on today would be those ADR, those China constituents, BABA, Baidu, JD, PDD, XPEV, NEO, EDU. That's a good group to focus on if you aren't really interested in the Bitcoin space. I like the Bitcoin space for a long today, because even with it up almost 3%, it's still down over 13.5% over the last 5 days. Talk about a beatdown. Well, if it's down almost 14%, I want to trade that rebound to the upside. more than KWEB, which is still down, 6.5%, even after rallying this morning 0.75%. But I get it. We all got our niche. If you don't like the Bitcoin names, then maybe the China ADRs are more your style. They're very likely going to have better options, right, on some of those names than on the Bitcoin plays. We've also got gold miners, some nat gas trash. We're not really seeing like semiconductors. If we're looking for a rip your face off rally kind of day, I would expect to see the Magnificent Seven, semiconductors, some of the FANGs. And don't get me wrong, they're up this morning, but they're not up very much. Cloud computing hasn't moved at all. Expanded tech, still nothing. We would want those to already be up, showing us interest that it's got some flows to it. And of course, not having flows means that flows could come in. It's not like they're negative at this point. Just that old commercial, where's the beef? Well, where's the juice? Where's the flow? It's not there. So looking at things that are up on TrendSpider, it is showing that SMH is up, even though Thinkorswim was not showing SMH is up. That's semiconductors. Okay, so it just happened. It's just one single candle right this moment. It was down. We got a dark pool print, and it popped up right at 8 o'clock, and now it's just giving it back again. The thing about these dark pool prints is that very likely could be the go back to point, like a gap close, right? We see that often where we get a dark pool print and then the market spends the rest of the day or maybe even a couple of days getting that dark pool closed. It happened right there, for an example. Towards the end of the day, big gap up like a dark pool print into 226, and it spent days getting back up to that spot. Yeah, we'll see. Either way, semiconductors are getting flows. So that's what we were missing. We were missing things like semiconductors, the Magnificent Seven, communications. We want those to be a part of the rally today. Otherwise, you're looking at a rally based on pot stocks in China, and that's not going to cut it, right? No. That's like trying to go boating in a tote. That's just not going to cut it. IGM continues to show that it's up, but we're not really getting any flows, right? And it's really hard to see here, but there's one at that point, and there's another one at this point. They're just algo prints. There's no real flow to this yet, but it's moving in the right direction. As we get closer to the open, maybe even get into the open, we might see some of them flows actually materialize. Look at just kind of scroll back and look at these other examples. It's not a guarantee. Here, for an example, in the pre-market, we were gapped up, and then before the open, actually went back down again. This doesn't get much behavior, much movement in the pre-market, just these dashes, little algo prints. So always take IGM with a grain of salt. Even with these really nice gapped up prints, there's nothing to them yet. So we'll ignore IGM, but that still puts Bitcoin in play and pot stocks in play. I'm still long MSOS. It's a good space. Behind that, we've got semiconductors. That's looking a little rowdy still. I'd give that a little time to play out. And then the China through FXI, but we already seen it moving through KWEB and emerging markets, because emerging markets is basically China. They don't deserve that classification anymore, but whatever. Uranium, silver, gold miners. Home construction ties in. Remember, we have housing data today. Let's keep our eye on this one. It could provide something more, right? And We did an AI search kind of asking the question, what would benefit from a warmer housing market? You know, whether it's land surveys, mortgage, insurance on mortgage, construction, remodeling, you name it, right? Just kind of going down the list. And I mean, there's a lot of spaces that would benefit from even a warm housing market. So far, we don't have that warm housing market. So want to watch that data to see if we can get it. We've got the right names moving in the right direction for a good rally today. We just don't have enough of it yet. And to be fair, we don't really want it to be too strong in the pre-market, right? Think about Apple, Amazon, Netflix, Google, Meta. If all of them had already ripped to the upside 2% in the pre-market, it doesn't really leave us much once we get out into the open. So we want them up a little bit, sure, but we don't want them, you know, too overly enthusiastic too early in the morning. The thing is, and I've got Microsoft here at this point, there's a simple line in the sand. We can do it here, but it'll be the same on all of these. Just snap a line from yesterday's highest point to yesterday's lowest point. If you're in doubt on whether or not you should use Globex or not, just go to the daily chart and do this if there's any doubt or confusion for you. We now have the midpoint. For Microsoft, it has to at least get through that. If we're going to look for any sort of rally and a continuation, it's got to get through that midpoint. Then we can challenge yesterday's high. It's not a really big deal, but if it can't even get above this, I don't want to try to take a long trade. Same thing with Apple. Apple's actually continuing to move to the downside. So we don't even need at this point to snap our fib to mark the halfway point. We can actually continue the measurement to the downside. And now we've got our next level lower, 167.37. Would be a continuation of the breakdown from yesterday. If Apple was to turn it around and come back inside, then a low risk entry right off of that 168 long would be good. But the concern would be, can we get through 169? And it's not bad, right? You got a good point or so before you hit resistance. But just keep in mind, all of these names are very close to reporting. And as someone mentioned in the chat, Netflix reports today. So we're not talking swing trades here, right? We're talking day trades. You get in, you get out. If they're going to report like Netflix, the options are going to be very poor in their pricing. So, you know, you're going to feel it. The fangs are probably not what you want. You're going to want to stick with your Bitcoin plays that I already named, or your China ADRs that I already named. But we have to recognize what these fangs are doing if you want a rally in the S&P or in the NASDAQ. Because if you don't have these fang names on your side, you're not going to get that rally in the S&P and the NASDAQ. Google, same thing. Got to get through the halfway point. It's fighting with it, but so far can't seem to hold it. And the same thing with Amazon. And you can do this with all of them, right? We don't need to go through each and every one of them individually. But if I'm looking for a rally in the S&P and the NASDAQ, a sustainable, good 1.5%, 2% move today, one of those real rippers, we got to get through these halfway points. And I would want to see all these FANG names challenge yesterday's high and get a solid breakout to the upside. And it doesn't have to be every single one of them. Apple's been divergent for a while now, right? Nobody really pays attention to Apple anymore. It's like the laggard at this point. There's so many better analogies, but we'll just leave that alone. It's just the one dragging its feet. So it doesn't have to be every one. But if you don't have the Magnificent Seven participating in that rally, you don't have a rally. It's very likely that I'll be posting some measurements for the Netflix earnings. That thing is called the account killer for a reason. It's earned its name because it has a history of moving much farther than its expected move implies that it should move on earnings, which has made some headline news over the years. So if we can build out a reasonably decent lottery ticket play on that, it might be worth considering. We'll have to do some charting and analysis first to lay out the possibilities. At this point, just keep your eye on the news. The Fed speakers, really, it looks like we're in the VWAP dance, like a zipper play. We've already got half. So if we can't get above VWAP, then we're just going to retest this low and continue to expand to the downside. If we do get above VWAP, we can use the zipper and just run it to the other side. This is the distance that we would target. Just set it to the upside. Oh, imagine that. It's the ADR half. Don't you love it how everything just lines up? The measurement from the downside plotted to the upside gives us our ADR high, which is what we were already focused on anyways. And that's if we can get and stay above VWAP. It's a big if. There is snow there. It's the voodoo line, snow. And right now we're looking like we're going to lose this daily pivot point, which we've been hovering around. It is worth considering the different pivot points that are out there, right? There's Person's pivots. These things automatically try to identify whether it's a bullish or a bearish day. So for an example, today, it believes it is a bearish day. So it's giving you the upside resistance, or what it would consider support for a short trade. And it's giving you the target for that short. It believed that yesterday was the same thing, that yesterday was a short. So it gave you the support level to play off of and a target to get to. It's pretty cool how we can go back in the past and find these, right? Of course, it's always easy to look in the past and find them. But Person's pivots will actually change direction. If it thinks that today's a long, then it would actually be like that right there, that one. It thought that this was a long day, and obviously it was wrong. It wasn't a long day, but you can see how the green line is much closer to the pivot point and the red line is much farther away, because this became an S1 and like an R2 or an R3. But if it thinks that it's a bearish day, like back here, then you got an R1 and like an S3, right? So it adjusts based on what it thinks the day is. That's a good question on whether or not it acts like a magnet. I haven't seen anything in spot gamma that would imply that it acts like a magnet. But they always talk about how when we get to the put wall, they expect the puts to be monetized, right? So they'll expect the puts to be traded out, and that very likely they'll start selling puts there and buying calls there. So it's certainly the area where we expect price to go to, but I don't think I've ever read them say anything like a magnet, or that it's drawing price there, or that it becomes, a self-fulfilling target or anything like that. I'm going to search around though, since now you've got me curious on it. I'll look around on their website and see if they imply anything like that. Everybody, that's what I got. Be careful, be safe, watch the clock. I will see you all tomorrow.